Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. So today during the session, we will be covering the post-non-farm payroll. So we've got a lot to cover with you today, guys. There's been a lot of movement, particularly on the US dollar, on gold and silver, on oil, on commodity currencies. We have a lot to cover with you during today's session. We will be going through a watch list of trading opportunities. Of course, we'll go through where gold, silver, and oil, the forecast of where we're expecting them to head next, answering questions, and we will be providing live support. As always, contributions are very welcome. So during the course of the session, there is a little chat function where you can either send the questions to me privately or send them to the host privately, and we can answer those during the session as well. Particularly, we'll keep it very interactive. So any questions at all, feel free to post those. Good. Okay, so let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For further information on the Gold and Silver Club and our expertise, all you need to do is go to our website, which is www.thegoldensilverclub.com. So feel free to go to our website. Okay, right, so we'll get into it and we'll move over to the charts very shortly. As we have now entered into June and we're coming up to almost halfway through the year now, it's worthwhile just having a look at the year-to-date performance in the market so far. So to give you an idea of the best performing markets, the worst performing markets, what that looks like in terms of percentages, what the overall major trends are at the moment. So as of about half an hour ago, this is the data. So currently we have gold, which is currently up over 10%, 10.6% on the year. In fact, it's broken out on the non-farm payroll numbers today. Silver, which is up 8.4%. We saw the NASDAQ, also the S&P 500 breaking out to all-time highs yesterday. The NASDAQ is up just under 20% for the year. We've also got the Dow Jones, which is up 7.3%, and the S&P 500, which is up 8.7%. The leader in terms of the metals has been palladium, which is up just under 22% so far in 2017. And some of the weaker commodities certainly have been oil, which we've been taking advantage of the sell short opportunities. So WTI crude oil is now down over 11% in 2017. Brent crude oil is also down over 12% in 2017. It's provided some good opportunities to sell short. So what does this information mean? What does it mean to you in terms of a trader, in terms of binary.com trading as well? Well, essentially the overall trend on equities and also gold, silver, palladium, platinum has been up in 2017. The major primary trends are up, and therefore the majority of the time, if you're looking to trend trade or go with the overall trend, it will be up and you want to be essentially buying. That's not including intraday moves where you can, of course, be going counter the overall trend, but by and large, longer term positions, you want to be with the overall trend. Also, what does that mean for oil? Well, certainly oil, WTI crude oil, and Brent crude oil, for the most part, over 2017, they have been trending down. They have broken down significantly over the last week. Since the OPEC announcements, so overall, you want to be getting on the right side of that, selling into rallies. Apart from short-term intraday moves, you want to be within the overall trend of those markets. That's the way you'd look to utilize that data, unless we were to see something fundamentally change within those markets, which could mean that the trend was going to change. Otherwise, you want to be getting on the right side of the trade. Now, with that said, this time last week, we were talking about the post-OPEC impact on the markets. There's been several trading opportunities now with oil over the last week, so I do hope that a lot of you caught these opportunities to sell into rallies, to sell into the breakdown in price that we've seen since last week's OPEC meeting. So if we have a look at our portfolio performance, our trading performance update, using our exclusive research-driven strategies, over the last week, we have certainly been taking advantage of the sell short opportunity on crude oil. So we took advantage in the earlier part of the week again to sell into the rally. So last week we saw initially we had a very profitable trade on the back of the OPEC announcement, which delivered our profit very quickly. We had a number of positions, but essentially we continued to see a breakdown in price after the OPEC meeting. A lot of that move was already priced in. So essentially OPEC went ahead and they went ahead with the 9-month output cut, which was anticipated, so an extension by 9 months. We saw a lot of that priced into the market already. We saw aggressive selling, and there's been more opportunities there to sell into subsequent rallies as well. We saw a rally into the close last week. We didn't see that follow through. Oil has rolled over and given us an opportunity to sell. So we entered at 51.55, exited one of our positions yesterday, and we still continue to have additional sell short positions on oil as well. Now, we've been highlighting the major trade opportunities, and what I mean by that is often you get very fast moves in the markets that you can take advantage of off major news items like OPEC meetings, US elections, FOMC meetings. So we've now had the OPEC meeting, which has passed over the month of May, and now we're moving into new fresh trading opportunities. Now, there are several coming up. One of the most important announcements this month is going to be on Wednesday, the 14th of June. That is the FOMC statement. Wednesday, the 14th, there are 8 FOMC statements every year. 4 of those are followed afterwards by a Q&A with Janet Yellen, and that is where you can see some big high impact moves on the markets, a lot of volatility off the back of that. So you want to have that in the diary. Wednesday, the 14th of June could certainly be a very big impact announcement on the markets, especially if the Fed do what as they're anticipated to do, which is to increase interest rates. Now, we've had breaking news yesterday that now James Comey, the previous director of the FBI, is due to testify next Thursday, the 8th of June. Again, we're likely going to get volatility on the US dollar and also gold and silver. That is next Thursday. Next Thursday is also the US election, so you can expect volatility on currencies as well. We've also got the European Central Bank speaking. Mario Draghi from the European Central Bank is scheduled to speak next Thursday as well. With that, we can expect a lot of volatility. So we've got some good trading opportunities coming up next week, certainly on Thursday, and then the following week on Wednesday, the FOMC statement and the ECB meeting as well, and also James Comey testifying. And I'm sure a lot of you are aware by now that Trump has now pulled the US out of the Paris Climate Accord, which has created quite a lot of uncertainty, and we've certainly seen a bit of a backlash on that over the last 12 hours or so since Trump did that, and that's also creating some additional volatility for the markets. US dollar, we've seen a bit of a sell-off today with equities as well, the S&P 500, Dow Jones, and we'll have a look at that too. So today's non-farm payrolls, very important to understand what those numbers meant. So essentially they came in below expectations. The non-farm payroll numbers came in worse than expected at 138,000 versus 185,000. The average hourly earnings came in as expected at 0.2%. The unemployment rate was down at 4.3%, and we've also seen overall the negative numbers there being the participation rate as well. So with that, we saw a breakdown on the US dollar. Gold immediately surged off the back of that. In fact, we saw a 100-point breakout to the upside off the back of that announcement. Gold very quickly getting bid back up as a result. So quite an impressive move. It certainly wasn't a non-farm payrolls, which was not eventful. It was a very big event today. We saw sudden moves on the US dollar to the downside. Gold and silver broke out. Oil for me is definitely one to watch today. Gold, silver, you want to have both of those on your radar as well. And also the commodity currencies such as US dollar, Canadian dollar, Australian dollar, US dollar as well. So for those of you who are new to binary, we'll just go through the procedure, what we look at in terms of the sort of functionality of the trades that we can take. For those of you who've been trading off binary for a while now, you're more experienced, this is just a bit of a recap. So we take advantage of the higher and lower type of trade on binary. The reason that we do this is it can enable you to take advantage of fast moves in the markets. You don't need to have a stop loss or a take profit. You just need the price to close higher or lower within the direction that you're predicting the market to go. You need to just get your entry right, you need to time your exit right, and you need to get the direction right. So for argument's sake, gold today, when it broke out after we got the non-farm payrolls, you could go for a trade for the price to be higher, in and out within 1 hour for the price to be higher. You don't need to worry about the stop loss or take profit. You can get in the trade quite quickly, and all you need to do is the price to expire in your direction, which was higher, within 1 hour, and you win the trade. So it enables you to take advantage of quick news items where sometimes you would need quite a large stop loss to give the trade a lot of breathing space, and it can allow for you to take big trades like that. Also, markets like Palladium, the S&P 500, where normally you might need quite a large stop loss on those markets, you don't need a big stop loss. So it's a great tool for your toolbox. You can take longer term trades, shorter term trades. It can be very useful for news trading, for shorter term trades, as long as you've got a bit of an edge in your trading. So if you understand a bit about intermarket correlations, the fundamentals, how to get an edge on your trades, technicals, you marry that up, you've got a high probability trade, you know what your upfront risk is, you know what your stake is, you know what your payout on the trade is, everything's transparent from that point of view, your risk reward, you know exactly what you're risking, what you can make on the trade, and all you need really to get right is the overall direction and the timing of that, how quickly you get out of the trade or what time frame you're using to be in and out of the trade. Okay, so with that, we'll talk through the charts here. We'll go through the technicals. We'll go through certainly gold, through silver, US dollar index, oil, commodity currencies. As always, guys, any questions or comments, feel free to put those into the chat. Okay, so I'm going to switch screens. Okay, so you should be able to see my screen now. So I'm currently on the gold market. Yep, fantastic. Okay, good. So we have been long gold. We've been long gold for a couple of days now, actually. So we have taken advantage of this breakout to the upside that we've essentially seen off the back of non-farm payrolls. One of the key metrics we were looking at here in order to stay long our position, whereas we've stayed long here going into non-farm payroll as well, is we would have exited gold only if it had closed this week below 1,260 US dollars per ounce. If it closed below that level, we saw the potential for gold to correct further and therefore provide a sell short opportunity. However, every time it came down to test the 1260 level, even on strong ADP numbers yesterday, we saw gold get bid back up. If you monitor gold on tighter time frames, you might be looking at gold, let's say for argument's sake, on the 30-minute, or you might be looking at on a 1-minute time frames. You could see every time it came down to this level of support, it was getting bid back up and getting bid back up quite quickly as well. We were seeing quite strong positioning there. Also, what was noteworthy was the commitment of traders data last week, which comes out every Friday, which showed that managed money, so hedge funds, have added to their net long position last week, which was the first time in a month that we'd seen a positive net gain from funds. So we had seen an increase in the amount of trades, or certainly the amount of long positions, which is buy positions, that hedge funds had taken last week, which was more than the subsequent than the previous 3 or 4 weeks. That was also another bit of information which gave us more confirmation that we were looking for support to hold. Not only that, we were also looking here in multiple currencies. So we've got gold versus the Australian US dollar on the left here, which actually broke out to these swing highs here, the April highs. It broke above those levels. It's the highest level that gold against the US dollar has been in over 7 months. Gold euro was holding up well, and gold versus the US dollar, but gold versus the Australian US dollar was very interesting because that already broke out from the April highs, which would be the equivalent of gold breaking above 1,295 US dollars. And it's not too far from that, but it already did that earlier on in the week. So gold priced in other currencies has been moving very well. It was the highest close for gold versus the Australian US dollar since November of last year, since the US election. So that was something to bear in mind as well. Also, the US dollar has broken down. It's taken out major support now. It is treading water at the moment at 96.70. Very important level for the US dollar to hold today. The non-farm payrolls have caused the US dollar to sell off. Momentum is quite bearish. It's been consolidating for a week and a half. None of the breakouts to the upside have followed through. The US dollar looks very vulnerable here. And if it does break and close below support here, we could really see it start to break down quite significantly. So I would definitely keep an eye out on the US dollar for the potential to break down further, which would inversely cause more upside, certainly for gold and silver as well. So we're watching out for that inverse correlation. So gold right now, yes, we do have a buy position. We've entered into this trade right at the lower end of this support channel already. We've got a breakout on lower time frames on non-farm payrolls as well. So we are looking for the price to go higher. It's towards the daily highs at the moment. If we go over to the daily chart, what are we looking at next? Really, there's not too much to stop gold from breaking out higher to the next level of resistance, which is approximately 1,285 US dollars per ounce. And then above that, we should get a retest very near towards the highs of the year, which is just below 1,300 US dollars, which we're only about 250 points or $25 move now for gold to get to. On a weekly chart, looks strong here for gold. Looks like V-shaped reversal pattern, more follow through. On a monthly chart, this is worth bearing in mind. We produced a very strong rejection candle last month here for gold. We've already broken above the previous day's high here, so we are on track for potentially following through to the upside here. You can see my channels where we're just about breaching now. We are getting very close to the high 1,274. We're just about breaching that at the moment. That is the highs from last month. So from April, we are on the verge of breaking that level. Very strong trend channel on the monthly chart. It's always worthwhile doing this, just marrying up your levels on the monthly, the weekly, and the daily. We've got a pennant formation, which we are on the verge of breaking on higher time frames. And right now, I see the potential for the US dollar to give way. But it could hold here. Maybe it will get supported into the close. But even so, yesterday, we saw a breakout to the upside on the US dollar on the strong ADP numbers. However, gold was relatively unmoved. Gold really only pulled back ever so slightly and continued to rally. So there are other fundamentals which are holding gold up at the moment. Also, you have the wild card next week as well, in the fact that things could start to get a little bit rocky in the US next week, especially as we get towards the later part of next week with James Comey, the previous director of the FBI, due to testify. Okay, that could be very important in terms of Donald Trump, volatility for the US, volatility for stock markets, volatility for equities as well. Although I have to say, the S&P 500, the Dow Jones, they've done remarkably well over the last week, even managing to shake off really yesterday's news items as well, with Donald Trump essentially coming out of the pulling the US out of the Paris Climate Accord deal, which I'm sure a lot of you are aware of. The S&P 500 and Dow Jones has done well to continue to break out to all-time highs today, although I would suggest overbought now, short-term overbought. In fact, it's interesting, my trend channel here is being respected and might get respected on a closing basis. There might well be a sell short opportunity lining up just from an overbought condition that we've got here anyway on the equities, but also with what is going on at the moment with the political climate in the US right now and the uproar that really this has caused now over the last just under 24 hours now, with Donald Trump coming out of the Paris Climate Accord. So this could be interesting to see if we do see an escalation. But we have seen a breakout to all-time highs. Whether it will follow through or not is worth keeping an eye on. I would suggest certainly have on the radar oil at the moment. So oil has broken down through some major levels over the last week here. So you can see where oil managed to break all the way down today to the daily lows. This is US oil. We'll look at Brent crude oil in a sec as well. In fact, I will switch over to a different chart so we can just put US oil and also UK oil side by side. So we've seen some support. UK oil has broken down into a major area of support, but it's below $50 a barrel. And you can see this was last week where we got our sell signal from the upper end of the trend channel as well. So just going back to oil here, so we'll do a comparison between UK oil and US oil. As you can imagine, since last week's OPEC meeting, we've been heavily trading oil. We've had a lot of questions about oil, what we're expecting next, what our forecasts are for oil, and so forth. Very clearly, you can see the overall downward trending channel, which oil is in at the moment. The V-shaped reversal pattern has played out very well here. We've seen a retracement back towards the upper end of the trend channel and then a breakdown essentially. And this escalation to the downside has been very quick. So we've seen a complete breakdown really for oil, very aggressive selling off the back of last week's OPEC meeting. The trouble for OPEC is there's still oversupply in the market, certainly compared to this time last year as well, although even the oil inventories came in yesterday as there was a deficit still compared to this time last year. There's a big oversupply in the market, a lot of that coming from the US, and with that we see the path of least resistance being down. Now we are seeing retracements during the day. If you were watching oil yesterday, it retraced off the back of the oil inventories initially, sold off again. What we're tending to see is rallies are being sold into. It is coming into a bit of support here, certainly for US oil and UK oil around the 47 zone for US oil, and for UK oil here around the 49 zone support, but it's broken below $50 per barrel. Bears, the momentum is on the side of the bears. We've got the oil rig count coming up, the Baker Hughes oil rig count, which is going to be coming up within the next about 3 hours or so, which has been increasing over the last few weeks. And I would suggest there's not really a big enough catalyst at the moment to drive oil significantly higher or stop this move to the downside. Not yet anyway. We've seen a lot of hedging on this move higher. So we've seen essentially a lot of traders hedge into the rally here once we got a $8 move off the lows, and that's also caused additional downside momentum here too. We've already broken below yesterday's low, and we see this a lot. Retracements, profit taking, then oil ultimately retraces again and closes near its daily lows. I'm still looking at more momentum to the downside here for oil. I'm looking for another break. So for essentially US oil, I'm looking for another move back to 47, possibly 46 in the short term. So within the next week, I'm looking for a rollover and breakdown. I don't think this is the low for oil just yet. We'll probably get some bids here around key support, but nothing major in my opinion, unless oil capitulates. What does a capitulation look like? This is what oil capitulation looks like. It would need to have a very significant buyback. It would need to close right at the daily highs, be a very solid green capitulation candle from a very oversold condition. We're not at that point. This is what it would look like, very oversold. Just my indicators here just show you I suspect we've still got more momentum to the downside here for oil. Although short term it could retrace, I just wouldn't want to pick a bottom here for oil just yet. I do think it's got more downside, both US oil, UK oil. It's retracing at the moment. Maybe you can take advantage of some very short term retracements, getting out intraday, maybe half an hour, 30 minutes. The daily time frame, I'll be looking to take advantage of rallies getting sold into. There is some underlying support at this level. Maybe we'll consolidate and hold at this zone for the next day or so, depending on what the oil rig data shows us. But overall, as we go into next week, I'm expecting more downside on oil. If we go over to the weekly chart, we are breaking down from major trend channels on the weekly. So I'm just looking for more follow through on both US oil and UK oil. Again, if we go over to the weekly charts for UK oil as well, I'm looking for a continuation to the downside. Again, we don't have any major catalyst at the moment in order to hold the price of oil where it is currently. So I would look for additional momentum to the downside. The path of least resistance for now on oil, in my opinion, is going to be down. Now, as such, you can also take advantage of the moves via the commodity currencies, which are tradable and binary as well. So we've got US dollar, Canadian dollar, which has been building up some solid momentum to the upside. We are doing a special webinar, which is going to be specifically training you on how you can take advantage of the intermarket correlations with commodity currencies when you're trading oil or gold. And there is that. If you go to binary.com, go to the webinar section, I'm sure it'll be sent out again, a reminder about that webinar, but you can join that specific session. I would definitely recommend joining us for that. It will be a special webinar dedicated to how to trade the intermarket correlations via commodity currencies. This is and why it goes into more depth about that, how each of the commodity currencies is linked to a particular commodity. So US dollar, Canadian dollar is very heavily linked to oil. So when oil breaks down, US dollar, Canadian dollar will see often the inverse correlation. It's about an 80% correlation that you will see. So essentially oil breaking down, US dollar, Canadian dollar goes up. And that's what we've seen over the last week. There's been opportunities to buy into US dollar, Canadian dollar and also sell oil. At the same time, that has also been relevant for Australian dollar, US dollar as well, which it's not a surprise here, considering that we've seen a breakout today on gold to the upside. We've seen a breakdown on US dollar as well. Australian dollar, US dollar has retraced here. We've seen a retracement back up to resistance. I would still suggest, because of the correlation with Australian dollar, US dollar to iron ore, that rallies could get sold into. Iron ore has broken down a lot over the last week or so. Although Australian US dollar is getting bid up from a major area of support here, I would still suggest maybe into the close, over the course of the US session today, we might see another retracement get sold into, and I'll be on the lookout for that with Australian US dollar. If we do see additional pressure to the downside here, we've got a trade. We have been shorting Australian US dollar, taking advantage of the overall breakdown in price. It's getting a little bit short-term overbought on the day, but at the same time, the US dollar is breaking down. If the US dollar keeps breaking down, you've got that strong inverse correlation as well. US dollar goes down, Australian US dollar goes up, and so forth, although it's also related to gold and also the price of iron ore. But gold has broken out to its daily highs today, and we could see potential for more momentum here as well for gold to the upside. But I would suggest we'll be looking for the potential for Australian US dollar to go down as well in the days to come as we head into next week as well. A quick summary on that. Again, going back to oil, I would suggest definitely keep an eye on oil. It's starting to roll over again at the moment. Could get another retest of the daily lows. So I would look out for that on oil, guys. So oil certainly have on your radar. Gold is continuing to break out at the moment. It's near the daily highs. Look out for the inverse correlations on US oil with US dollar, Canadian dollar as well. Okay, so with that, I'll just bring it back to the main presentation. If you enjoyed today's analysis, but you would like to be kept updated during the week, real time, if you want to be kept with commodity research, trade notifications via email, SMS, live trading rooms during the week, which are also recorded as well. So if you really want to take your trading to that next level, all you need to do is go to www.jointhegoldandsilverclub.com. Put the link in the description there. So it's www.jointhegoldandsilverclub.com to really take your trading to the next level, so you get access to all of our commodity research, all of our fundamentals as well, all of the intermarket correlations that we look at day to day, commitment of traders data, what research that we look at, seasonality, cycles, trends, research. A lot goes into our analysis before we take trades. Notifications, so you get updated on trade management, entry, exit, take profit on every single position that we are taking, real-time notifications via email, SMS, and live trading rooms during the week. So we've just actually done a pre-non-farm payroll trading room today as well, which has been very profitable for our gold trade, and also our running open positions, sell short on oil, which we've got at the moment, which is up over 200 points right now. So again, if you'd like access to that, all you need to do, guys, is go to www.jointhegoldandsilverclub.com, complete the application form. We'll get in touch with you ASAP on that. Do make sure you just provide contact details, and we'll be getting in touch with you ASAP. Again, what do you get access to? You get access to our live trading rooms, our special news trading room webinars as well. You get access to our trade setups during the week, trade management, entry, exit, take profit, exact levels that we're getting into trades, our weekly trading plan with a watch list for the week ahead, live trade support and institutional level trading research, and commodity insights. So I hope you got a lot of value from today's webinar, guys, from today's session, and you can use some of that to your benefit, really. And with that, yeah, I wish you all a fantastic weekend, good trading, and of course we'll catch you back here on the next one. Okay, thanks very much, everybody. Thank you for the note, Roland. It's been a pleasure. So with that, guys, good trading, all the best, and we'll see you on the next one. Thanks, everyone. Bye-bye.